Topic 1. Escalating trade tensions between the U.S. and China, marked by tariffs causing global market volatility and economic uncertainty. The trade tensions between the U.S. and China are rapidly escalating. China has responded more strongly than expected to new U.S. tariffs, withdrawing its request for negotiations and imposing a 34% tariff on American products. This increases the likelihood of a prolonged tariff war between the two nations. The situation is significantly impacting global markets, particularly causing a sharp decline in the stock markets of China and Hong Kong. President Trump maintains that these tariff policies will drive economic change, while European defense industry stocks are also experiencing volatility, contributing to growing economic uncertainty worldwide. Such trade tensions could have negative repercussions on the global economy, prompting countries to seek countermeasures. Topic 2. Significant decline in global stock markets, with particular impact on defense stocks and crude oil prices, raising fears of a recession. Global stock markets are plummeting following President Trump's announcement of new tariff policies. Defense stocks and crude oil prices are particularly hard hit, raising concerns about a potential recession. European defense stocks, which had surged in recent months, are now in decline following the tariff announcement. Major defense companies in Germany and France, such as Rheinmetall, ThyssenKrupp, and Thales, are seeing their stock prices drop, along with U.S. defense giants like Lockheed Martin and General Dynamics. Oil prices have fallen below $60 per barrel due to fears that Trump's tariffs could push the U.S. and global economies into recession. These tariffs are expected to increase corporate costs, slow economic activity, and negatively impact oil demand. J.P. Morgan has warned that these tariffs could lead to a recession in the U.S. and global economies this year. The U.S. stock market has seen significant declines across major indices like the S&P 500, NASDAQ, and Dow Jones, driven by the disruption of a free trade-based economic order by the Trump administration. Economic experts caution that these tariffs could have long-term negative effects on the U.S. economy. Topic 3. Concerns over forced labor practices, leading to the U.S. blocking sea salt imports from South Korea, highlighting global scrutiny on ethical supply chains. Concerns regarding forced labor practices have led the U.S. to block sea salt imports from South Korea. This action underscores the increasing global scrutiny on ethical supply chains and the importance of ensuring that products are sourced responsibly. Topic 4. Jaguar Land Rover halts shipments to the U.S. due to tariffs, reflecting the impact of international trade policies on global business operations. Jaguar Land Rover, JLR, has announced a one-month halt on vehicle shipments to the U.S. in response to the 25% tariffs imposed by President Trump. Owned by India's Tata Motors, this decision is a short-term measure to adapt to new trade conditions while developing a long-term strategy. The UK automotive industry employs around 200,000 people, with the US being the second largest importer of British vehicles after the European Union. JLR sells approximately 400,000 vehicles annually, with about a quarter exported to the U.S. The Trump administration has implemented a 10% base tariff on all imports and customized tariffs for specific countries, reflecting the impact of international trade policies on global business operations. Topic 5. Economic impact on Scunthorpe due to job losses in the steel industry and challenges in the UK housing market. Scunthorpe, a historical center for the steel industry, is facing significant economic challenges as Chinese-owned British Steel plans to halt operations at 2 blast furnaces, threatening 2,700 jobs. This is expected to severely impact the local economy, leaving many residents facing economic uncertainty. Local businesses are already grappling with difficult economic